It begins with a historic announcement. Elon Musk, the visionary entrepreneur behind Tesla, SpaceX, Neuralink, and other transformative companies, wins the US presidential election. Markets react immediately with a mixture of euphoria, skepticism, and uncertainty. Investors, policymakers, corporations, and everyday Americans attempt to project how a leader so uniquely positioned in technology, innovation, and business could reshape the economic landscape of the United States. The first impact is seen in the stock market. Technology stocks soar in anticipation of a pro-innovation, pro-business administration. Companies associated with space, electric vehicles, artificial intelligence, and sustainable energy experience dramatic gains. Tesla stock, already symbolic of Musk's influence, reacts sharply, while aerospace, robotics, and high-tech firms also see heightened investor optimism. Conversely, sectors perceived as heavily regulated or resistant to innovation, such as traditional energy, conventional automotive, and some financial services, experience cautious trading and moderate declines. Elon Musk's presidential agenda emphasizes technological advancement and infrastructure modernization. Policies supporting electric vehicles, renewable energy, and battery innovation receive immediate attention. Federal funding and incentives for research in AI, space exploration, and energy storage increase. Corporations aligned with Musk's vision of the future benefit from favorable tax treatment, grants, and public-private partnerships. Stock market sectors aligned with these policies experience sustained upward momentum as investors anticipate profitable opportunities. Federal regulatory policies undergo transformation. Musk's approach to regulation emphasizes flexibility, rapid iteration, and disruption-friendly frameworks. Agencies like the FDA, FAA, and FTC adopt accelerated approval processes for technological innovations, creating opportunities for startups and high-growth companies. Stock prices in biotech, space tech, AI, and autonomous systems surge in anticipation of faster commercialization and reduced bureaucratic hurdles. Energy markets respond to presidential priorities. Policies incentivizing electric vehicle adoption, solar energy, wind power, and battery storage accelerate the shift away from fossil fuels. Traditional oil and gas companies experience volatility, while clean energy producers, EV manufacturers, and battery companies benefit from increased federal support. Stock valuations reflect this sectoral reallocation, with long-term implications for energy markets, industrial growth, and consumer adoption. Space exploration receives unprecedented support. Federal funding for NASA and partnerships with private companies like SpaceX increase significantly. Investments in satellite deployment, Mars colonization, space tourism, and orbital infrastructure expand. Aerospace contractors, satellite operators, and launch service providers see immediate market gains, while research universities and technology incubators experience increased funding. Stock markets react positively to anticipated revenue streams from public-private space ventures. Corporate taxation and fiscal policy experience significant reform. Musk's administration focuses on incentives for high-growth industries, research and development credits, and capital reinvestment allowances. Corporations restructure operations to maximize eligibility for federal incentives, boosting investment in innovation. Stock valuations reflect expectations of lower tax burdens, higher profitability, and accelerated corporate expansion. Consumer markets respond to policy shifts. Rapid advancement in EVs, autonomous vehicles, and renewable energy products drives adoption, particularly among tech-savvy and environmentally conscious demographics. Companies supplying infrastructure for EV charging, battery manufacturing, and sustainable energy benefit from increased demand. Stock markets in these sectors continue upward momentum as consumer adoption accelerates. Financial markets initially experience volatility. Investors attempt to predict policy outcomes, regulatory changes, and sector winners and losers. High-growth, innovation-driven sectors benefit, while traditional or heavily regulated industries face uncertainty. Stock indices adjust to reflect changing risk appetite, with increased capital flow into technology, energy innovation, and aerospace. Labor markets experience sectoral realignment. Jobs in electric vehicles, renewable energy, space technology, AI, and advanced manufacturing expand rapidly. Conversely, employment in fossil fuel extraction, traditional automotive, and regulated financial services may decline or stagnate. Workforce retraining programs and educational initiatives accelerate to meet new skill demands. Stock markets reflect corporate adaptation to labor supply shifts, with wages, productivity, and hiring costs influencing valuations. Trade policy adapts to innovation priorities. The Musk administration emphasizes international partnerships that support technological advancement and supply chain security for critical materials, batteries, and aerospace components. Tariff structures are adjusted to incentivize domestic production while maintaining global competitiveness. Companies engaged in international trade restructure supply chains, influencing stock market valuations and investment strategies. Infrastructure investment surges. Federal initiatives prioritize EV charging networks, high-speed transportation, renewable energy grids, and next-generation communication infrastructure. Public-private partnerships accelerate implementation, benefiting construction, engineering, and technology firms. Stock prices in infrastructure and technology sectors reflect the anticipated long-term revenue potential from government-supported projects. Financial regulation evolves. The administration emphasizes digital finance, cryptocurrency integration, and blockchain adoption. Policies favor innovation in fintech while attempting to balance consumer protection and market stability. Companies in digital payments, blockchain infrastructure, and crypto services see heightened market interest. Stock valuations in fintech rise as investor confidence in a forward-looking regulatory environment strengthens. Defense and security policies integrate advanced technologies. AI, autonomous systems, space-based surveillance, and cybersecurity are prioritized. Defense contractors and technology firms benefit from increased contracts, investment, and innovation opportunities. Stock markets respond to anticipated revenue streams and the strategic positioning of technologically advanced defense solutions. Consumer electronics and AI adoption accelerate. Federal support for AI research, neural interfaces, and robotics drives commercial applications. Companies producing smart home devices, industrial automation systems, and AI-enabled consumer products see rapid growth. Stock markets reflect investor enthusiasm for sectors benefiting from accelerated innovation and adoption cycles. Venture capital and private equity activity intensify. The administration's pro-innovation stance encourages investment in startups, emerging technologies, and high-risk, high-reward sectors. Stock markets respond positively to increased capital flow, IPO activity, and successful exits in tech-driven industries. Global markets respond to U.S. policy changes. International investors monitor federal initiatives supporting EVs, space, AI, and renewable energy. Companies with international exposure adjust strategy to align with U.S. innovation priorities. Stock indices for multinational firms fluctuate as trade relationships, technology transfer, and regulatory adaptation evolve. Energy sector disruption continues. Electric utilities, battery manufacturers, and renewable energy providers experience long-term growth. Traditional oil and gas companies face strategic pressure, operational restructuring, and market volatility. Stock valuations adjust to reflect structural shifts in energy consumption, regulatory incentives, and technological adoption. Corporate governance adapts. Musk's leadership style encourages bold innovation, rapid decision-making, and integration of advanced technologies into corporate operations. Companies adjust internal processes to align with anticipated federal priorities, potentially accelerating growth in stock market performance in aligned sectors. Transportation infrastructure evolves rapidly. High-speed rail, hyperloop projects, and autonomous vehicle networks receive federal support and funding. Companies involved in construction, technology integration, and logistics benefit from long-term contracts and revenue potential. Stock markets adjust to reflect increased investment and growth in these transformative sectors. Financial markets experience ongoing adjustments. Volatility remains as investors balance optimism for technological growth with uncertainty about long-term policy implementation and economic impact. Stock indices reflect both the promise of innovation-driven sectors and the risk of policy missteps or market saturation. Labor productivity and innovation capacity increase. Workforce adaptation to advanced technologies drives higher efficiency, automation adoption, and global competitiveness. Companies leverage federal incentives and technological integration to expand output, influencing stock valuations and market confidence. Education and workforce development are prioritized. Programs supporting STEM education, vocational training in emerging industries, and advanced technological skills are funded. Companies benefit from a pipeline of talent, accelerating innovation adoption and revenue potential. Stock markets adjust to reflect growth opportunities in technology and skilled labor-dependent sectors. Consumer behavior aligns with federal priorities. Adoption of EVs, renewable energy solutions, AI-enabled products, and space-based services accelerates. Companies producing or supporting these products experience revenue growth and positive stock market performance. Retailers, logistics providers, and technology integrators adjust strategy to meet increased demand. Corporate debt markets experience favorable conditions for innovation-aligned firms. Access to financing improves for companies involved in technology, space, renewable energy, and AI. Stock valuations rise as capital availability supports growth and expansion plans. Global supply chains are reshaped. U.S. policy emphasizes domestic production for critical technologies while maintaining international partnerships for strategic materials. Companies adjust sourcing, manufacturing, and distribution strategies. Stock markets respond to perceived competitiveness and supply chain resilience. Financial innovation is accelerated. Cryptocurrency adoption, blockchain integration, and digital finance initiatives are supported at the federal level. Companies involved in fintech, digital banking, and blockchain services experience growth. Stock markets reflect investor confidence in a forward-looking financial regulatory environment. Public perception and investor sentiment are heavily influenced by Musk's communication style. Transparency, social media engagement, and high-profile announcements drive market expectations and volatility. Stock markets respond to both real policy developments and public sentiment, creating waves of opportunity and risk. Corporate M&A activity intensifies. Strategic acquisitions in technology, energy, space, and AI are accelerated to capitalize on federal support and market momentum. Stock valuations for acquiring and target companies reflect anticipated synergies, growth potential, and market positioning. Infrastructure and manufacturing sectors experience long-term growth. Companies producing advanced batteries, EV components, AI systems, and aerospace technology expand operations. Stock markets respond to expected revenue streams and long-term investment potential. Defense and space-related sectors experience sustained federal contracts. Companies involved in satellite deployment, orbital infrastructure, autonomous systems, and cybersecurity benefit from stable, predictable revenue. Stock valuations reflect long-term government support and strategic positioning. Consumer confidence fluctuates but trends upward in technology-aligned markets. Optimism regarding innovation-driven job creation, product availability, and lifestyle transformation drives selective spending. Stock markets respond to consumer adoption of EVs, AI-enabled products, and renewable energy solutions. Corporate strategy focuses on rapid innovation and alignment with federal priorities. Companies in technology, space, energy, and AI sectors invest heavily in R&D, production capacity, and talent acquisition. Stock valuations reflect both growth potential and execution risk. Global geopolitical positioning is influenced by U.S. technological advancement. International competitors respond to accelerated federal support for advanced industries. Trade negotiations, technology partnerships, and strategic alliances are shaped by perceived U.S. innovation advantage. Stock markets adjust based on global competitive dynamics and policy implications. The energy transition accelerates. Federal support, corporate investment, and consumer adoption converge to increase renewable energy penetration, EV usage, and battery storage capacity. Stock markets reflect long-term growth in clean energy and infrastructure sectors. Corporate earnings reflect alignment with federal priorities. Companies in supported sectors experience revenue growth, operational efficiency gains, and market expansion. Stock valuations respond positively to predictable policy support and innovation-driven profitability. Labor markets experience long-term structural shifts. Skilled jobs in technology, engineering, renewable energy, and aerospace expand. Traditional sectors adapt or contract. Workforce retraining programs and educational initiatives accelerate, influencing both corporate productivity and stock market sentiment. Investment strategies increasingly favor technology, energy innovation, aerospace, and AI. Capital flows to high-growth sectors, IPO activity increases, and stock indices reflect concentrated gains in innovation-driven industries. Global markets adapt to U.S. technological leadership. International investors and corporations adjust strategies based on anticipated federal support for cutting-edge industries. Stock valuations for multinational firms reflect opportunities and risks arising from technological competition and federal incentives. Corporate culture evolves. Rapid decision-making, technology adoption, and innovation-centric management become industry norms. Companies aligned with federal priorities achieve competitive advantage, influencing stock valuations and long-term profitability. Consumer markets continue to adopt advanced technologies. EVs, AI-enabled devices, renewable energy systems, and space-related services gain popularity. Corporate revenues grow, and stock markets reflect rising consumer demand in aligned sectors. Financial and credit markets stabilize gradually. Increased investor confidence and government support for innovation-driven sectors balances residual volatility from market speculation and high-profile announcements. Stock prices reflect both opportunity and measured risk. The Musk presidency reshapes the U.S. economy, financial markets, and global competitiveness. Technology, energy, aerospace, and AI become central pillars of economic growth. Stock markets adjust to reflect sectoral realignment, innovation-driven profitability, and long-term federal support. The scenario illustrates how a business visionary at the helm of government could accelerate technological adoption, reshape economic priorities, and create profound shifts in investment, labor markets, and corporate strategy. It underscores the complex interplay between policy, innovation, and market response in shaping the future of the U.S. economy and stock markets.